Hi, traders. We posted a cautionary note on our Telegram channel last week, warning of heightened volatility and manipulation that would begin from this past Wednesday. Well, we certainly got that. So let's talk about the latest Israeli attempt at bringing peace to the Middle East. We have in the past, in both our YouTube and Telegram channels, discussed the managed nature of previous military strikes between Israel and Iran, and advised traders not to get carried away with opening longs on FOMO due to the inevitable crash back down from the panic rallies. The latest development in the Iran Israel saga, however, is not another drama, and it certainly looks as if managing this new reality show will be a fool's errand, although the current American administration will try their best to oblige in fulfilling that role. We need to understand that although this is now a serious conflict between the two countries that neither can manage based on a shared pre written script, it's also not all out war just yet, but that could change at the drop of a yarmulke. There's going to be a huge amount of rolling information out there on this conflict for as long as it continues, much of it propaganda. Here at GFX, we will try and help those who spot trade gold with leverage by providing selective information on this major geopolitical development that's relevant to that type of gold trader. That information will be provided in readily digestible chunks, both on our YouTube channel here and our Telegram channel. Let's take a look at the H1 chart up on the screen here. As you can see, the gold market panicked but didn't quite crap the bed when the Israelis first struck Iranian targets last week. Yes, we did get a rally on market open on that Friday, but price fell into a relatively tight range from here until the end of the trading day. Another important point to note is that retail brokers increased the spread for XAUUSD as soon as news of the surprise Israeli strikes came to light, but the increase was relatively modest compared to the wild fluctuating spreads that retail brokers put into place for a few days during the height of Trump's initial tariff rollouts before he became known as Taco by Wall Street traders. With missile exchanges between the two countries having escalated over the weekend, we expected a gap up on market open today, and if you saw our recent video on gaps, you would not have been caught out with the buy trap here that has now trapped a lot of retail traders. The gap up today was filled relatively quickly, and once the market structure was broken at this level, we saw a further push down. Now, what's the play going into a new week? Two crucial points to note. Firstly, if you think that going long anywhere from where price is sitting at any point in time is money for old rope, think again, as this kind of conflict is much favored by the smart money to trap buyers before they maneuver the tank for a brutal correction. Longs should only be taken from strategic dips. Secondly, the aforementioned strategic dips are going to be that much trickier to identify, given the fact that the kind of geopolitical conflict that we are discussing here tends to panic the markets into effecting price action that does not respect standard static support and resistance levels. That's why in the GFX VIP channel, our members will benefit from intraday levels that will be updated each day along with guidance throughout the day on selected levels in real time. If you enjoyed this video and wish to see more analysis on the geopolitical front that will continue to affect gold for the foreseeable future, please hit the like button and leave a comment. Until next time, trade safe.